Okay, ladies and gentlemen, I'm back again. So to continue with the conversation that I was having, um, this is a possible double bottom right here, and pattern symmetry completion is at the on the E-minis at around this level, or possibly to 1976 or thereabouts. So this pattern, in my opinion, does get completed. The bearish case is that we break below, like I said, below this Bollinger, below 1926, below today's lows, and at that point we slip pretty hard. Let me show you a couple of quick. This is a 1 hour chart, obviously, so shorter term. So on the 1 hour, we got deeply oversold, um, and now we're starting to move up as futures are up about 18-20 points because of the China thing. What happens when the European markets open? I believe there is going to be a ripple effect, and the European markets will move higher. Who knows? Maybe the Chinese markets will collapse another 5% for all I know in the next hour, 2 hours. As long as they're open. So all this gets negated. But anyway, we'll see. So let's take a look at the 4 hour chart here. We're starting to see, um, so here's that big drop, right, from the most recent one from last Wednesday, about a week ago. We dropped, like I said, 150 points, roughly about 800 points or so, if not more, on the Dow Jones. And at this point, the bounce should take us to the mid Bollinger that comes to about 1979. So that's really where I'm targeting. And I've mentioned this before. In the meantime, oversold, it can still, oversold can remain oversold, mind you. So this could stay around here. But in my opinion, it probably gets up here. And given the capitulative nature of this bullish candle reversal, as we saw, and futures up 16 right now. Again, futures, it absolutely has no bearing what happens, now, because that's just the way the markets are these days. You can't tell by what's happening to the futures at 10 o'clock Eastern Standard Time here. Okay, so um, another thing that I noticed, and this is, like I said, I share experiences, what has worked for me for many, many years, is you look at the McClellan oscillator, it's at minus 327. That's good enough for me to have a short-term bounce, and I'm sticking to it. Let's take a look at the daily, keeping this simple. Let's take a look at the daily. This is certainly a capitulative candle. It can go higher. There's no question about it. At that point, we would probably, this is the downtrend line coming from all the way back here, uptrend line or uptrend support if you want to call it. So we still have this in the works. That's 1905 as an engagement. Okay, 1905 on the E-minis. What I'm noticing is this. I'm starting to notice on the daily a turn on the stochastics, which to me is positive because every time this has happened, we have had a couple of 100-point rally. It happened here, mid sorry, it happened here mid December, and a big rally that ensued, right? And then we fell again, and this was so okay. So I was looking at this. All right. The same thing happened here on November 16th. We got down to these levels that we're talking about right there. Let me get this bigger. Right there. And a huge rally ensued. Okay. And these are big money rallies. Okay. Well, most of you, I don't know about you guys, but I know that majority of the traders don't participate in because they're so frozen and terrified with everything that happened and the demons in their head, as I love to say, just take over them. They seldom participate in these big rallies, or if they do participate, they sell out very early, and then they regret that they didn't hold on. It's happened to me before. I try to manage my trades a lot better, hold on to things longer, and it certainly paid the bills in a nice way. Um, Look at what happened here on September 29th. Quite got down to the same deep oversold levels like we are right now. This was a monster bounce, obviously. This is the big, huge crash, which is somewhat similar to what's happening here. And this was the big flash crash, 1,200 points, immediate buy when it dropped and then it ran up a good 1,000 points or so, and that was also off these levels. So this is level one has to respect, where you get deep oversold, the shorts have to cover, then the market runs. The other thing that I noticed was these minor positive divergences, or maybe major positive divergences, we don't know, that are being played out internally. Now, positive divergences don't mean that they're going to work tomorrow. It simply means they're developing, and at one point, you're going to get a monstrous rally. Okay? Uh, there are many different ways to explain it. One says that smart money is buying at these levels, so the selling pressure is not as exasperated, as bad as it looks on the prices. So if you look at the McLaren oscillator, for example, or histograms, you're going to see, look at this. This was the big move here. We almost came down. This was the big flash crash. Then a month later, in September, you came back almost to the same levels, but look what was going on with the oscillator. It was higher. So that's a positive divergence. It should have been down here. Now, these are simple things, so I keep on repeating them because, like I said, you gotta repeat them till people understand it. But not hard. So here we had the oscillator hit the bottom at 307 when we were at 2,000. Okay, above 2,000 on the E-minis and the S&P 500. We came down all the way down here, 70 to 80 points lower, right? And look what's happening to the oscillator. The oscillator never made it all the way down to that minus 300 level or minus 296 level, 298 level. That's telling you something. That's a positive divergence. Now, I know most of you don't care about it, doesn't look at it. For me, I care because it's worked for me and it's made money. That's it. So take it or leave it, right? Like they say, straight out. So those are key things. This I like a lot. Certainly looking like a turn. Even if we go halfway here, we're good for going up a good solid 50 points or so. That's roughly about 300 points on the Dow. 50 points or so on the minis, so that's 300 points on the Dow. Again, this was the support level that we broke, which we had bounced off, and that's 1982. I'm targeting 1982 for now. Okay, one at a time. Again, I repeat, if we slip here, if we slip below this, we got the level at 1900. Show you where this line is coming from. This line is coming from all the way down here, and that's a major uptrend support, and that's 1908. Break below that, the lower Bollinger comes into play. That's at 1823, or roughly around 1830. Do we get to 1830 right away? Hey, look, anything can happen. But if we do get down there, this is the type of reversal candle you can expect for a good 1,000 points on the market. So I'm ready for it too. Okay. Take a look at the S&P here. Take a look at what's going on a shorter term basis. I mean, behind us tonight. And this is what's going on. Right there. We're bouncing. We hit the 34, the downward sloping 34 moving average on the 1 hour, and look what it did. It hit it, it bounced down. Now we're having a little bit of profit taking going on, after hours mumbo jumbo. Bottom line is that we need to clear the 1957, 1960 on the E-minis in order to get up to 1970. We cross over the 50-day moving average on the 1 hour chart, then obviously we're talking about going up to 1990 or 2000. Now, why are these levels important? Because that's what we trade in, right? All these momentum stocks, all these stocks, they're all trading within this. Now, the other thing to keep in mind, which I've talked about before in my coaching sessions and also carry a lot of weight, is the distance you have traveled from these highways. These highways I call the 50 and the 34-day moving average, this orange line and this red line, okay? So on those highways, if you want to talk about it, this is a 200-day moving average right there. It's kind of a confluence, all of it at around this 2054, 2040 level. You see that right there? Okay. Now, the distance traveled between, the further you move away from it, it's called standard deviation, right? So this is the confluence of all these lines. So the distance here, I would say, is a good, we're probably -5 or 6 standard deviation. That's quite a bit of deviation away from the moving averages, which are still somewhat moving sideways, as you can see here by the shape of the curve, right? So the last time we moved that further away, this was like a -9. This moved. See, here was the moving average, and the market just collapsed, moved away from there. Here, I would say was like a minus, it's similar to this, probably a -5 standard deviation. This is probably a -6 standard deviation. So what does that mean? That means there's a reversion to the mean. You always get back towards where the highways are, which are the 34 and the 50-day moving average. It always happens. Call it a dead cat bounce, call it a reversal bounce, retracement bounce. I don't care what you call it. It happens. Okay, it happens because shorts cover, something comes out, there's a coil spring effect where there's a pent up demand to buy certain things because they got too cheap, whatever the case may be. So the point is that if we get up there, then that's a pretty humongous move. That's about a 60-point move from here. And what's 60? That's a 100-point move from here. And on the S&P, that's roughly 600 points. Is that going to happen? I don't know. This pattern symmetry could be a complete V-shaped rally if China fixes itself. And if you think that you guys are, phenomenal macroeconomists, you think China is just doomed forever, well, that's that's a prerogative to think that. So the point is that this V-shaped move here is a low probability event, in my opinion. However, let me just zoom in a little bit. However, a move up to at least this level here or even here is a very, very decent sum of money. Okay? Now, this is a daily on the E-minis I'm showing you. I already told you about the McLaren oscillator, told you about the stochastic crossover that's taking place. So all kinds of good stuff. Who knows? All right. In the meantime, how you manage your trade, how you roll over your options out for the next week or the week after, you do what you need to do. I put out my parameters, you run with it. Okay? You do what you need to do. Just because something didn't work out this week and you're underwater, like I said before, blame the fat guy from North Korea. Don't look at me. So the bottom line is you just got to you got to manage your own trades, okay? You can't expect somebody to handhold you into everything going in and out. It just doesn't work like that. It just doesn't work like that. And I'm just not going to do it because it's not physically, humanly possible for me to do it. How about that? In the meantime, one of the key things that I want to mention to people, which I've said that so many times, it's almost like hitting my head on the wall, is for God's sakes, follow your own charts. Use my service as a tool, as a very handy and powerful tool. You can match my charts by using the similar platforms and things like that. But if you want to be an active trader and you make those 200-300% type of things on a reversal move in the bottom where Amazon goes down from being 14 to up 10, you gotta look at your own charts. I don't know what to say. I mean, it just befuddles me how many people trade without looking at their charts and just looking at the prices. The prices really tell you nothing because with the algo high frequency trading programs in the market, the prices are changing on a minute by minute basis. It's the trend you got to look at. So I don't, like I said, I'm at a point here where I'll be very clear with people that I am not going to handhold as much, and I'm not going to answer that many questions during volatile times in the market, aside from important things which I think can help people because it's really getting to me. All right. I'm seeing some members who are not even trying 1 ounce to learn, to put in the grunt work, and I'm just not going to do it because I don't want to get burnt out trying to help somebody. I just don't want to do that. That's not the purpose of my service. Okay, I just want to be clear about that. So here we have a McLaren loss at a -500. I mean, I don't know how many times over the past year or so, year and a half since I started my service, told that at this levels, the market is screaming by. Some people listen, some people don't. Good luck. So the bottom line is that at -500, a oversold bounce is coming. How quickly that alleviates itself and goes up to about +200, I don't know. So at this point, you can clearly see here on the E-minis, we're approaching 1970. We could be there by the morning, to be honest with you, and then probably a pullback. But look at how the patterns develop. That's all you got to train your eyes on. Right? All you got to train your eyes on. That's all I got to say. Have a great evening and God bless you all.